Hi, it's Larry Gaines. This is my market update for January the 27th, after hours. What I wanted you to look at here with me is that the S&P 500 futures. Now, you can see we had this high that came in back right on, hold on, right here. One second here. Now, what we're going to look at here tonight is the S&P 500. And Apple. So we had another major, down day fall through here on the S&P futures. Now, with our trading model, you can see when, we got in this compression squeeze that started on the 17th of January, the market was in this consolidation choppy phase or churning, just could not get any higher. So we had a compression squeeze, and this basically tells you that the market's either going to break to the upside or downside. Now, based on our lower study indicators, you can see that the momentum shifted, and the studies that we use, went to the downside, and the market went to the downside too. So it's a great, trading model, to show direction. Now, the thing I'm going to show you now is that once we've had this move down, we broke through here. This is the 50 simple moving average right here, and we've taken it all the way down here to a low of 1766. Now, the next support levels at 1754 here. And I'll show you some other major support levels on the next chart. But what you'll see here is this 3 down days. Now today's Monday, and you had another sell-off, and then it came back up towards the close. But you're getting in a position here. If we have another down day tomorrow, you're going to start getting some major margin calls, and that's when you can really flush the market out. So that's one thing I wanted to show you. Now the other thing, I'll show you the potential targets to the downside. Now first off, you can see right here, if you look back in May, on the 22nd, you had the high, which came in right here at about 1667, and then it chopped around. Then a month later, you put in a low right here at, came in at 1545, and that also came in, that was a trend line that we developed. So here's a cycle low, pivot low here. And right now you've got this trend line, same from these pivot points here. These are swing low pivots. That's the best way to draw a trend line. So from most current back. So you can see here we have a trend line that same trend line extension comes in at 1746. Now, so this is going to be a key support. Now these are your moving averages. Here's your 50 moving average, which got just taken out right there. And here's your 100-day moving average. And then below that is your 150. And then very low part right here is your 200. So the key support levels right now will be coming in here at this 1747 area, and also that pivot low extension there at 1754. But then if you take this measured move from this May high to low, that's 130 points. And that 130 points, the market likes symmetry. So from this high, 130 points down is right here at 1718. So if this doesn't hold area, this area right in here, this is a good support area at 1756 to 1747. Then the next major support level will be this 1718, which is also 130, the symmetrical move from this big move last year in 2013. So these are my zones. These will be demand zones right in here. And then all the way down to there. So, but now, since the market has closed below the 21 EMA, this dashed line here, and the 50, that we've had 2 down day closes, that the first time up to these areas, that will be an area that I'll look to get short at, and I'll probably look at some bear call credit spreads or something like that. So we had good volume on the sell-off, but if we get a little bit lower tomorrow, you probably had some margin calls today. You may get some more tomorrow. And we'll see what happens. Now, another big factor that happened and can influence the markets tomorrow will be Apple. Now, Apple's earnings were released today after the close, and you can see here it flipped up and made a high of right here at about about 562, I believe it was. Let me see if I can get that line better. Yeah, it made a high of 562. And then it just cratered and made a low down here at about $500 even, $500, 500.52. Now, when you put in your Fibonacci retracement levels, this is what you need to look for tomorrow. That if this low here holds, then you want to see how much of a retracement it can get and how much it can take back from this after the close fall off. So the key levels that you'll be watching tomorrow will be, the first level will be 520, and then the 50% retracement 526, the 618 532. And then if it can get into this gap, this will be a major gap area, then see if it can go up further. Now that's on a retracement. Now the other levels to look at to the downside are as follows. Now here's where Apple closed today, and then after hour, it made a low down here at 500, which came into the 150-day moving average. Now below that is the 200-day moving average. So this is going to be a key support area, 200-day, and right here is a good support zone as well. So what I'll be looking at tomorrow, we went into the earnings here with a spread on, a debit spread, a non-directional debit spread, and right now it looks pretty good. We're in the money, up about $100 on that. But tomorrow what I'll be looking at is to see how it handles this 500 level here if it does open up down here. Now after the market it was down here, but things can shift overnight. So I'll see how it handles this area here, and then I'll see how it handles those retracement levels for the first 30-45 minutes to see if you put in a pivot low. Now that's one thing I'll be looking at. Now if you don't put in that pivot low, then this 480 can be in play. But what I'll be looking at tomorrow with this really big spike down is to look for some kind of consolidation or some kind of pattern, a pivot, spike down, then a pull back up. And I'll probably look to sell a bull put credit spread. I'd like to see what the premiums are around this 480 level and below. This could be a very good area to sell an extreme sell-off and do that using a kind of a bullish called bull put credit spread. So I'll be looking at that and see where the markets go tomorrow. So right now the markets have been hit hard. We did have a little bit of a rally into the close today, but they're still in a precarious situation, and until you get back above those 50 moving averages on the S&P in that 21 period, the first thing I'll be looking at is areas to do some kind of short activity with some pretty tight stops, because this market's been a hard one to short. So I hope that helps, and I'll talk to you on my next video update.